Hello, everyone. Welcome to the market update here for Tuesday, March the 28th. As always, if you have any questions during the week or any questions I don't get to here in the live class, make sure you send those to jerry@traderspro.com. And also, if there's any audio issues that you're noticing, clicking or anything like that on the audio, make sure you let me know. I can usually dial back in and get rid of it if it's there, but I usually don't hear it on my end. So, all right, let's get started. I wish there was a lot more to talk about, but we're still kind of stuck in this range. I'm going to show you when we get to the chart here what we're looking at, and it's the same old thing. The market not being able to figure out where it wants to go. Down a little bit today. It was looking a little bit more bullish on Friday, actually, with the price action. But I pointed out a couple of key areas on Thursday's class. We'll review those again because we're still haven't broken out of those areas yet. So, usually these indecision periods don't last very long. But we've had a lot of them over the last couple months where we just the market just can't seem to break out of this general area, and eventually it will. But this is where your patience gets tested, because there's a tendency to start searching in these periods of time. You want something to trade, you've got money in your account, you want to use it, you don't want to just sit there and do nothing. I've only got one stock in the portfolio, and it's been that way for about the last week and a half or so. You want something to do, and the worst thing you can do is go find something to buy right now when there's not a lot that is really there's not a lot of stocks in great positions to buy. To get aggressive, in other words, right here is probably going to be something that can be very deadly to your account. Remember, we're trend followers. We're trying to let the big professional traders determine where the market is going to go, and we're just going to follow. And if those professionals are saying we don't know where we want to go right now, whether it's going to go up or down, and you start getting impatient saying, well, if you can't figure it out, I'm going to do something, that's where you can get steamrolled, because you can end up on the wrong side of whatever they decide to go, and get hammered. Now, on the other other hand, maybe you get lucky, and it's a 50-50 shot. You trade in the same direction as they do. Hey, if you're in a period of your life where if you could overcome a bad mistake, if you are on the wrong side, but could benefit greatly if you guessed early and guessed right, go for it. But I would assume that the majority of people I'm working with are not the youngest, and not in the position where they can kind of gamble on their financial future. So it's just safer to wait until it shakes out and then just trade in that direction. That's all we're doing right now. As far as the direction alerts, not much to comment on here. The recent rally has alleviated a little bit of that near-term oversold condition. We didn't get really extremely oversold, but momentum is right here in the middle. Now, what does that mean? It means basically the market could go either way. It's not stretched either way. It's not stretched. It's not oversold, not overbought. And so there's room, and this makes sense, where we've been kind of indecisive. We've been moving sideways. And remember, in order to alleviate an overbought or oversold condition, you don't have to go, and the market doesn't have to move in the opposite direction. It can just move sideways for a period of time, and it'll alleviate that condition. That's kind of what we've seen over the last week or so, is more of a kind of just a sideways movement. Breadth is still in the high range there, but off the extreme range, and then sentiment is still it's been in that extreme complacency area for quite a while. Buy-sell ratios have come a little bit closer together. They were pretty extreme. They're starting to come a little bit closer together. the sentiment indicators, again, well off the oversold range there. Again, all this is just saying is that there's room here where we could go either way. If the market wants to rally, it could rally for a little bit before getting overbought. If it wants to drop, it can drop a little bit before getting oversold. All right, let's get to the charts here. Now, Thursday, what I was talking about, was we had, obviously, I talked about kind of this impulsive move down. This was looking a little bit more choppy, more corrective. We had this big bearish reversal day that happened. This was back on, what day was that? That was last Wednesday, I believe. And it looked like, that was a big enough reversal move that looked like, in the context with impulsive down, corrective up, although this was a deeper retracement, we had pointed that out. We were past that 6-8 retracement of that move down. Looked like it might kick off a drop after that. But ever since last Wednesday, we've been stuck inside of that big reversal candle right there. And so if you remember last Thursday, what I said was, hey, what we're looking at is can we break out above that candle or below that candle? That's the first thing I would look at. As long as we're inside of that, I'm not making any major decision there because we're stuck. We're stuck in this range here. Now, typically, I'm just looking at the range of the previous day. Are we above or below the range of the previous day? But because that was a significant reversal day and a big candle right there, and the fact that you can see that we've been kind of stuck in that range, it's become this area has become a little bit more significant. Can we break down below it, above it? And I don't want to just trade above it or below it. I want to close above or below it because we traded below it. Both on Thursday and Friday last week, but obviously didn't close below it. We traded up to it. The intraday high yesterday was right at the top of that range. Again, I don't think it's a coincidence that we rallied up to that yesterday and then we couldn't get above it. It's something that the market is focusing on right now, at least in the near term, and we don't need to know why. We don't need to know the reason why that's significant. Let those big institutional traders, figure that out or wonder about that. We're just going to wait until they decide where they want to go. Not quite sure I understand your question. What data is behind these market graphs that you analyze in these classes? Are you talking about the algorithms for like overbought, oversold, or you just talking, because otherwise it's just price action. The charts we're on right now, I'm just analyzing the price action. You'd be a little bit more specific in your question. Maybe I'm just not understanding the specific question there. Anyway, all right, so that's real basic. Now, some of the other charts are in similar key areas that we talked about on Thursday as well. But at least for now, this is kind of, and as long as we're stuck kind of in this area here, because we're down today, it doesn't mean a whole lot. We had a little bit of a bullish reversal candle on Friday. Looked like things were going to start moving up, and like I said, it didn't last very long. Today, it's looking like things could start moving down. The VIX is actually kind of up a little bit. Had a little bit of a bullish reversal candle on it, but all I'm seeing right now is that today's price action is showing that we should move to the lower part of that candle. And I've got to see a breakout here pretty soon. Now, could it be that we spend all week inside this? Yeah, it's possible that could take place. Now, let's back out a little bit and kind of look at the bigger picture real quickly. Again, I've gone over this a few times, but I just want to make sure that, because again, we could break out either way. What happens if we break out to the upside? What does that mean? Well, if we break out to the upside of this candle from last Wednesday, we break out above here, immediately we're going to be looking at this high. We should run up to that high. And then probably we could encounter some resistance there. There's a lot of resistance in that area there. Obviously, this is another one we'd be looking at up here, is another area that we would expect to get to. Now, I still am not long-term bullish if we were to break out above those levels. I still think that this was just the first part of the correction. This moved down last year. This is working on wave B. I think if we could rally up into this area up into here, this would just still look so choppy that I would still look at that as being corrective, wave B, and then I still think we're eventually going to get that wave C down. Now, part of why I'm starting to shift a little bit more towards, and again, this could change. We could have a news event that freaks the market out. Although I go back to that bank, I thought for sure that bank, the regional bank crisis was going to kick off the panic sell-off, and it didn't. And it should have. Now you can always have a little bit of a pause. We had the initial move down off of that, and then you could always have a little bit of a pause, or people start trying to figure out what's going on, and then you should drop again. You shouldn't be. We shouldn't be that indecisive for this long off of that news event, and so it's caused me to believe that maybe the market is too bearish right now to drop. It needs to get a little bit more hope that things are over with and that things are fine. And that would definitely play into the possibility that we rally up a little bit further, especially if we break out of this kind of range we've been in for now. I mean, you can see that here for the whole, basically since the beginning of the year, we've been stuck in the sideways range. And so a break out of that range and a move up, and even a breakout above here possibly, is that's going to be an area that a lot of people are going to focus on or watch. Maybe we break out of that and everyone thinks, okay, everything's fine, and we're, at that point, we might even start to see that long-term indicator shift over to a bull market signal that could, could be one of those things that cause a lot of people to think that everything's fine, everything's done, and then maybe you get that wave C, and who knows, maybe you don't get either of that. Maybe it just takes off from there. Like I said, the reason why I've been very cautious to turn bullish in this area here is just because of the choppy corrective nature of the rally. Anytime you see that type of behavior, you want to pay attention to the direction that you were moving in before that was taking place, and we were clearly moving down before this kind of choppy behavior. And again, gets back to the same things you keep hearing me talk about. We just never got that panic sell-off that really flushes everyone out. And again, maybe this is the time it doesn't happen. I don't get too caught up in, you got to be, I look at these longer term expectations. I kind of map out, areas where I'll turn more bullish or more bearish. And it's a combination of things. It's the chart pattern. It's the price behavior, that impulsive corrective type of behavior. But I don't get my purpose is not to be Nostradamus. My purpose is not to predict what's going to happen next and then bask in it if it does happen. That's where you get killed in this business. If you can't adjust and follow the trend, then you're going to get killed. And if this is the time when we don't have a panic sell-off and things are going to take off, then you got to be prepared to move in that direction, act, or you're going to get you start shorting a market that's done going down, and that's a quick way to go broke, trying to fight that trend. So, I'm I'm leaning more bearish just because of everything I keep seeing here. But we should, like I said, we should be dropping. If we should be starting that move down, and we're not. We had that initial move right here. This is when the banks had that little scare. Yeah, I'd expect a little bit of a retracement of that, but now this is getting ridiculous. We should be having an impulsive move down again, and we're not. So the longer that takes place, the longer we kind of keep kind of inching our way higher, start breaking above support levels or resistance levels, excuse me, you've got to start to turn more bullish. So again, and that's why we do these classes each week, is that as we start to see some of those signals, we point them out. I'm doing some of the work for you, trying to teach you as well as kind of help you and do some of the work for you there to tell you when things are shifting. And all I can come up with right now is just this area right here. Now, like I said, if we go to other charts, we're seeing kind of the same thing. The Dow, remember we pointed out that there's a support level right here. We broke below it on that bank sell-off. We've rallied back up to it right here. Now, so far, it's holding as resistance, and we're rolling over today. But still, if you look at that candle from last Wednesday, we're still kind of trading within that big down candle right here. Obviously, if we break down below here, it's more likely the market is going to be heading lower. The Dow, at least, is going to be heading lower. If we break up above that resistance area, that would be near term. It would be a lot more bullish if it can do that. Hopefully by Thursday we have a little bit of clarity on this. I said that last week. Last Tuesday I was hoping for a little bit of clarity on, and it looked like we were going to get it. Wednesday we had that big drop. It looked like things were going to start taking off out of that, and it just didn't happen. So, like I said, hopefully this is the final week where we're stuck in this mud, so to speak, and we start moving. Like I said, I don't care where we move. We can make money, good money, if the market's moving. Even in the portfolio, if we drop, we can jump into some of those inverse ETFs we've used and make money with those. But when you're in these sideways ranges, there are things you can do with options in sideways markets to make money. But I'll tell you what, I've said this before, very often when you're dealing with these sideways markets, if you're trying to make money in sideways markets, you often work twice as hard for half as much money, and that's not very fun. You don't like to. I don't mind working hard, but to work twice as hard for half as much money is not the best thing to do. All right, the Qs. Now the Qs have been the most bullish of the indexes, but even then they got up to this breakout area right here. We couldn't break out. We were rolling over today. Now we have moved below. That's the Wednesday candle from last week. We have moved below that. Now the Nasdaq has been the leadership index for the last little bit. Is that signaling something here that it is the first one to move below that last Wednesday's candle? We'll see. I would like to wait until the others were to confirm that first, especially the S&P. But we'll keep an eye on that, see if that is signaling anything by Thursday's class. And then Russell 2000. Now, again, this one's been up a little bit. off the lows. But this is where, again, the majority of the stocks in the Russell are those small bank stocks or a lot of the financial stocks. And so obviously those have been beat up, and they've been oversold. So we're getting a little bit of an oversold bounce. There's really not any significant support or resistance. I mean, we did drop below. There's the Wednesday candle right there. We did move below that, but also we're back in it over these last couple of days. I mean, you could look at it to see if we go back below there, because there's a lot of support in this area right here. Because it's so oversold, it wouldn't be surprising if, again, it doesn't have to rally up to alleviate that oversold condition. It could move more sideways, and maybe that's what we see. Is maybe we see another day or so where it just kind of moves sideways a little bit. I told you about being careful about jumping into those regional banks that have been beaten up. It's easy to think, boy, they're going to go right back up again to where they were. Be careful. I don't see that happening. And the problem is that maybe they do eventually get back up there, but it could be, 8, 10, 12 months before that happens. Especially if we're heading into recession, we could be down at these levels until the recession is over. And, and basically what happens is, well, first of all, there still could be more downside risk, especially if the market starts selling off again. And then if it does eventually go back up to where it was a year from now or what have you, I mean, that's a lot of time. Obviously, it depends on your trading time frame. If you're looking out 2 or 3 years or something, and you don't mind sitting on it, something that may not do anything for a long period of time, then go for it. But now you've got to then choose, okay, which stocks are going to make it through all that. And like I said, that's what's scary about these bank failures, is that it can really start to snowball. And what you thought was a bank in a good condition, there's no way that anything's going to happen to that bank, could end up happening to that bank. And so, I usually when things get slammed down like that, they don't come right back very quickly. I would still, you look at, what's the one that FRC? Let's look at that one for example. This thing, it was $100 stock. Just a few weeks ago. If you're saying, okay, man, I'm going to buy it down here and it's going to go, I'll just wait for it to go back up to there. I don't care. It's going to be, if it's 3 or 4 years, I don't care. That'd be a great return. Well, obviously we know this bank's in trouble. That's an obvious one that you wouldn't want to just jump into. But I just don't see why not just wait until it starts acting like an uptrend. If it starts to have an impulsive move up, and then correcting back down, impulsive up, correcting back down, I could get in somewhere in this area right here where it's now acting like an uptrend and still make a lot of money if it works its way back up there. But at least I'd have some behavior of it acting like an uptrend, as opposed to just guessing that it's going to start going back up. It's got to go back up. I think that's where people really get into trouble, is because if that was the case, why aren't the professional traders jumping into that? I mean, isn't that the obvious move? I mean, why aren't they piling into these companies if they're likely to go right back up to where they were before? I mean, these are the biggest fund managers in the world. That'd be the greatest return of all time if they go right back up there. Why aren't they piling in? Well, because they know that there's a good chance that there could be more carnage, and they're not willing to take that risk. So sometimes the obvious trades aren't the obvious trades. You gotta, and that's why it always helps to just wait until the chart starts acting like it should be acting, because that tells you the professional traders are jumping in. You start to see that behavior of impulsive up, corrective back down, impulsive up. It's that stair step up. That tells you those professional traders are starting to get in. And then you know that it's much more likely to work its way back up there over time when you start to see that. But right here, this looks to me like it's still holding on, like it's got another move down. You got impulsive down. This is corrective. What should happen is you should have another impulsive move down out of that. Or in this case, it may be the impulsive move where it just shuts down. It can't be saved. Or it gets bought out. So we'll see what happens there. Yeah, there's a question here about gold and silver. Yeah, I mean, those are trending upward. Yeah, I'm not saying there aren't pockets or areas that you can get into. What you don't want to do, though, is get too aggressive, meaning, take a small silver or gold position or something like that, manage that trade. Yeah, I'm not saying there's nothing you can get into. There's always, the phrase, there's always a bull market somewhere. That's usually the case. But there's also, again, allocation. You don't want to be just piling everything into that. I had a gold trade and it was doing just fine, and then gold sold off. I ended up making money on it, but it gave back a big portion of what I had made. So bear markets are just tough. It's just hard to get consistent returns there. All right, bonds. Now, bonds have pulled back a little bit here, but overall, the chart, it looks very bullish. You back out, you look at a longer-term chart. But this is the type of bottoming process I would look for, even in the banks area. You have this big decline, you got an impulsive move up, and then this has been corrected. This looks choppy and sideways. It looks like it's starting to turn the corner. I'd like to see it break out above this range. That would make me more bullish on bonds. And it's looking more and more like it's going to end up doing that. If we zoom back in, we have that larger impulsive move up, this larger corrective period that's lasted now a few months. In the near term, you've had this more impulsive move up. This looks more corrective. You're at about a 50% retracement of that move up. So I would anticipate that bonds are going to start to rally up again, at least back up into this area. And then if it can break out above that area, that'd be pretty bullish. And if it does do that, if we do see bonds break out and move higher, it could be a signal that the bond market at least is anticipating that the rate hikes are done. Doesn't necessarily mean that it's anticipating the Fed is going to immediately start lowering rates. They can't. I don't see how they can immediately start lowering rates without inflation just ramping back up again. Like I said, there's got to be a pain element that changes behavior. And if you don't get a pain element strong enough to change behavior, then that behavior isn't going to change. And we'll go right back to spending again if we're not scared to spend. And so, people are talking about the Fed breaking the economy, and I'm not trying to defend the Fed. The Fed is, the Fed's an easy group to pick on because they almost always get it wrong. But I understand why they get it wrong. I understand why they overdo it, and they overdo it because of human nature. Because if they don't overdo it, then the behavior doesn't change, and the problem doesn't get fixed. So it really comes back to us. It's our own fault that we have to overdo it. We have to do stuff to change the behavior in order to solve inflation or solve um, the economic slowdown and things like that. There's I get it. I see what they why they have to do what they have to do sometimes, and I like I said from the beginning, they know how to get us out of a recession. That's probably where they got the most experience. How many times we had bad inflationary problems? We haven't had this bad of an inflation problem since the 70s and early 80s. And so, but we've had several recessions. So the Fed is pretty comfortable being able to draw us out of recession if that were to take place. But what they don't want is a long, drawn out inflationary period like we did through most of the 70s. And again, I was a kid at that time, so I don't remember what that was like from a personal standpoint. Some of you do. But that's part of the problem is there's a whole generation, a couple of generations basically that haven't experienced that or remember that. And that's, that's a real threat right now that it could get prolonged, because the worst thing to have happen is to have everything rev back up again and then have to raise rates again. You start cutting them, then you have to raise them again. And now what should have been we should be done with this. And, now you're drawing it out another 3 years where you're trying to battle the problem. And, like I said, it's going to be painful. Whatever happens is going to be painful. I'm at the point now where I'd rather get the pain over with now instead of making that pain last an extra 2 or 3 years. But it's not going to be, anyone that thinks this is going to be something that's going to, the soft landing, or we're going to get out of this with no pain at all. Boy, that would be a miracle, and that'd be the greatest thing that could happen. But from a probability standpoint, I don't think that's going to happen. I think there's going to be some rough periods ahead of us here. All right, so, but that's, keep an eye on the bond market, see if it can work its way back up to those highs and break out possibly. Gold, again, has been a nice little uptrend here, broken out recently. It's just confirming that trend. It has gotten up into this extreme overbought. But remember what I've said many times about gold and silver in particular. They can run overbought for quite a while. You can get in some of these commodities. When they get going, they stay in these moves for a while. So to think that you missed the move just because you missed that move right there, it can still keep going and getting a more overbought. And especially, like I said, with this is ideal conditions for gold and silver, because not only do you have the inflation aspect of people tending to go into gold and silver to protect against inflation, but you also now have people afraid to keep their money in the bank, at least their uninsured portions of their income or their money. And so what you're seeing, two things right now. You're seeing it go into bonds because it's protected. It's protected in bonds, or into gold and silver. You're seeing money pile into those as a safety type play. So I see that only continuing, particularly if we continue to hear problems with the community banks. I think this is a trade that could continue here for a little while. Yeah, because this is where I got bounced out. This little drop right here. It's a little bit deeper drop than I was anticipating. I thought I had a pretty wide stop on the trades I had, but ended up getting stopped out on those. Now, oil's made a little bit of a run recently, and what I would watch for right here is it's kind of moved up into this area right here. What you're looking for here is this become an area of resistance? It was kind of the floor. It broke below that pretty quickly. See, it didn't even pause back here. It just broke through that pretty key area right there. Now it's back above it. You could also kind of draw a trend line down through here to see if that axis has some resistance. There could be it could be that some of this rally is attributed to replenishing the strategic oil reserve. Is that going to provide a little bit of a floor for oil? Well, that's what I'm going to watch for. Do we see it start? Do we see it break out above here and then come back down, and then now we start seeing this active support? Like I said, it didn't right here, but maybe when it got down into here, maybe the government did start to buy back some of that oil. I want to start looking to see if the price action is acting more bullish, meaning do we have kind of maybe some sort of a pullback or sideways move and then move higher? Are we stair stepping up? Overall, we've just been kind of in a sideways mess. If you back out, you can see you can, if you really draw kind of a box through here, oil really hasn't gone anywhere for the last several months. And so I'll be interested to see does it find some resistance here and we come back down, or are we just kind of stuck back in this range again? I kind of hope it goes down just from the standpoint of filling up my tank every week. I'm sure many of you feel the same way, but it's always frustrating when, because it happened in our area here where we got this big drop in oil and actually gas prices moved higher. And it's like, what is going on there? It's always, that's the gas prices are always, when oil drops, the prices drop very slowly. They would go down very slowly. But if oil starts going up, man, those gas prices shoot up very, very quickly. And I'd like to know. I'd really like to know how those, because I can't believe that they're true market forces that are deciding that stuff. That's always been a frustrating thing for me, especially as it relates to other states. Here in Utah, we not only have some oil that we not a lot. We don't have a lot of oil, but we have wells and stuff that we have ourselves. But we've got a few refineries outside of Salt Lake. So we've got refineries here. We have a little bit of our own oil, and yet our oil prices are probably just below California's as far as, our gas prices are always some of the most expensive in the nation. And it's been a big, I don't know, there's got to be something going on there that isn't right. All right, the dollar. Keep an eye on the dollar movement with commodities. There tends to be that relationship. Dollar weakness usually means commodity strength. And so it's not surprising that gold and silver and oil are rallying with the dollar coming down over the last little bit. Now, this was last week we were talking about maybe this is impulsive. This is an ABC pattern right here. We're right at the deepest retracement area right here that you would want to see. And so if we start getting below this area right here, I would assume that the dollar is going to move back down towards this low. But we had a big jump. We had this bullish reversal candle last when was that, Thursday, and we had this jump up on Friday right here. Looked like maybe it was going to start moving up, and then it came right back down again. So kind of the same thing that's going on in the market. A lot of indecisive moves there. But if I were to draw an area, obviously these lows are going to be important. If we break below those lows, that'd be very bearish for the dollar. And then obviously if it starts moving up closer to the upper part of this range right here, that'd be more bullish. And keep an eye on that over the next week and see how that plays out. The VIX, had mentioned at least before class started, the VIX had reversal, but it's actually off the highs, which again isn't surprising that it's that it is that we're seeing kind of that whipsawing that's been taking place. Let's take a look at the SPY here real quick. It's off the lows a little bit, but not much. But this gets back to what I was talking about last week. If the market does rally, this is going to be another reason why I'm not going to trust the rally. I mean, it could rally for a little bit, but I don't see it really taking off, because you'll be right back down to, the VIX down to 18 and it'll be ready to start selling off again. I didn't like how quickly it came back down off of those elevated levels. And like I said, it didn't make a lot of sense with you get the uncertainty of a possible financial crisis and the VIX is coming way down like that. So we'll keep an eye on that. Again, nothing, by the way, the VIX isn't always going to show you something significant every day. So if you're seeing something significant every day out of the VIX, you're probably overanalyzing it or looking too much into it. You got a little bit of a bullish reversal candle. I had a little bit more of a bullish reversal candle with a down day, but I don't see that as being overly significant because we're still stuck. Let me go to the SPX chart right here. We're still stuck in that range from last Wednesday. Now, if we break below here and the VIX starts spiking up significantly or looking like it's spiking up, I think that would be significant. By the way, I go back to this day. You get a day like that where you get a big bearish reversal candle like that. Not huge volume, but it was above average volume. You should get a drop out of that. Although again, you always have to allow for a pause day. One, maybe two possible pause days, but it should drop. The fact that it hasn't now, it makes that move. It's not as significant anymore. It should have happened. If it was going to drop, it should have happened. And the fact that it didn't, that's where you start to turn a little bit more bullish in the near term, because it's telling you that buyers are there. They're not strong buyers, but the sellers had their opportunity to continue to sell, and they didn't. And well, actually, that's the problem. You got the sellers that aren't showing their interest in selling aggressively, and you're not seeing aggressive buyers, and that's why we're kind of stuck. We're stuck in this range, and that's what we're waiting for. So one side, and I don't know what that is. Sometimes it's a trigger you look for. They need a reason. Now, we don't have a lot of reasons. I don't think. I have to look at the calendar, the economic calendar. It's not usually a priority of mine to keep up with the economic calendar. Although it has been recently because of, everyone's focused on CPI report and Fed meeting. But this gets back to what I talked about last week with the Fed meeting. The market keeps focusing on these events. Okay, we had the Fed meeting. That's supposed to be the trigger, right? That's supposed to tell us what we need to do. And we don't go anywhere. So what's the next focus? Okay, the next focus is on the CPI or the next jobs report. Now the next jobs report, I believe, comes out next week. Not this Friday, but next Friday. But it hasn't meant anything recently. The last CPI report didn't really, trigger anything significant. At least that alone didn't. so what it tells me is that the market is waiting for something else to trigger it. That's why it said. That's why I thought that bank thing that came up was going to be the trigger, because it came out of nowhere. It was unexpected, and we started to see the market sell off, but then it's recovered from that. So, but that's the behavior. The behavior is indecisive right now. The market's waiting for something, and I don't need to know what it was or try to guess what it's going to be, but I need to recognize that that's what it's doing right now. And so when I see it jump up or down, if I see it take off, I got to be ready to trade that direction, or at least be ready to make some decisions based off of that direction. And that's, again, this gets back to why I've got one stock that I'm hanging on to. It's we don't want to lose money in this type of condition. We don't want to blow up our account and then suddenly have the market make a very definitive move, and we don't get to profit from it because we're spending the whole move trying to make up what we lost. It's just, especially as disciplined as we've been now for pretty much a year. We've traded, but our priority is to protect capital. Man, the last thing we want to do is blow it right here when we're getting close to the bottom, and actually have to spend the first half of the bull market just trying to make up what we lost. Chip stocks, now these started to break out, and that was looking more bullish. We talked about that, but then we're right back below that range again. I'd like to get bullish again. I'd like to see the chip stocks get back above there. Maybe the NASDAQ 100 break out back above its highs that's had trouble breaking out above. Remember, chip stocks tend to be a leading indicator for the NASDAQ 100. So the fact that it did break out, I thought, okay, that's pretty bullish for the NASDAQ 100. But again, we haven't seen it confirm that. Let me just quickly bring up the QQQ chart. See, the Qs didn't confirm that. They didn't break out with the chips. So now it could just mean that they're about to, or they're going to. So we'll keep an eye on that. But yeah, you kind of want to see how whenever you're trading tech stocks, you want to kind of see how the chip stocks are performing and try to trade in the trend of those chip stocks as much as possible. Transportation stocks rallied a little bit off the lows, but again, I talked about this kind of bearish head and shoulders pattern, the neckline right here. We broke below that neckline, rallied back up to it, we rolled over again. Now, if we get back above that neckline, that would maybe be a little bit more bullish for the transportation stocks. That would also break. You got lower highs, lower lows right here, so a break back above here. Now, because it's so close to that neckline, I not only want to break above here, but get above the neckline somewhere in this area right here. But if it did that, now you're back above the neckline. You've broken this downtrend of lower highs, lower lows, and especially if it does so in a kind of more of an impulsive move up. But it starts just moving up sharply, gets up into this area here. All that behavior would look a lot more bullish if it can do that. If it stalls out, though, and rolls over, it's just confirming the bearish chart pattern. But yeah, that neckline right here is going to be a key area to watch, at least for turning more bullish. Obviously, this would be a support area down here that if it breaks lower and breaks below that, that'd be more bearish. Bitcoin, it's been in a pretty nice little uptrend. I've talked about this a number of times where I think that Bitcoin bottomed down in here. And again, you wouldn't want to get overly aggressive, and you'd want to, do your research and find out which cryptocurrencies are the most stable. I'm not a crypto expert, so I'm not going to attempt to point you in a direction there. Although I would assume that Bitcoin itself is because it's the one everyone's heard of and knows about, that it's probably going to be one that survives any shakeout that might be taking place. But that's been looking pretty good, and there are some stocks that are tied into Bitcoin that some of which are starting to look a little bit attractive to me. One is Mara, M-A-R-A. Now, just from a chart standpoint, I just like the way it's. Let me go back here. Let's look at a little bit of a longer term chart. I like it when you have these big declines, and then it looks like you have this big move down, and then this impulsive move up, and then this is looking more corrective. Now, obviously, I'd like to see it break out, but it looks like it could be starting to turn around there. I've been even looking for a shorter term trade on this. This is impulsive. This looks like it's corrective. This was a pretty big down day though yesterday. I need to see some sort of bullish candle out of that. But this looks like a little bit of a correction. About 50% of that moved down. Now, if it keeps dropping and it drops below that, it could be coming down to this area of support. I probably wouldn't be looking for a shorter term trade on that for a little while longer, but this is one that kind of jumped out when I was looking at charts. And if it did give you a bullish, reversal candle, a short-term trade could just be back up to this breakout area. Now, as far as a longer term, this has only got a 14 strength rank, so I don't know that I would be. These aren't exactly the types that you're looking at as far as using the software. You could probably find a good pattern that's on the right side of that bull that has a 80 or 90 strength rank. That would be a little bit probably a little bit better bet. But anyway, that one is just one I noticed the other day, and it kind of ties into that Bitcoin trade. All right. As far as the portfolio is concerned, I only have the one trade. It's actually been working out pretty nice. We got close to getting stopped out on Friday on this intraday low. But see, that's why when I moved my stop, I wanted to get it a little bit below this area right here, just in case it did something like that. And I do usually wait for the close. If we close at or below my stop, then I'll stop out. That's usually how I like to do it. But it held, and now I had a big update today. This pattern still looks really good. Impulsive up, corrective, impulsive up, corrective, pull back to the breakout area right here. Looking like it's getting ready to break out again, although there's a lot of resistance up here, and I think that's why it kind of started to break out today and then come back down. We'll see how it looks. It's starting to get into the extreme reversal risk. But so far, this has been a pretty good trade. And again, I've been stuck in this 137 to about 142,000 area for a while. I'm okay with that. The biggest goal in this bear market is just not to. If I can grow that slowly, great. But I just don't want it to drop significantly. All right, couple of sectors. There weren't a lot of charts I liked out there, and hopefully by Thursday's class, since that is where we tend to focus more on the specific trades, that there'll be a lot more, and hopefully by then, like I said, we're either breaking out above that Wednesday candle or breaking below it. But under business services, there's a couple I like. This Paysign, PAYS, 98 strength rank. Again, nice uptrend. This little impulsive move up. This looks corrective back down. It looks like it's kind of holding this breakout area right here. A little bit of a bullish reversal candle today. Down candle yesterday, but a little bit of a bullish reversal candle today. Now you could wait as additional confirmation to see if it goes back to a buy signal, or on these, it wouldn't hurt to get the market confirmation. So you wait until see if the S&P can break above that Wednesday candle. It's just it's not that you have to have market confirmation on your trades, but the reason why we do the market analysis first and then we look at particular trades is because, about anywhere between 70 to 90% of stocks are going to follow the major market averages, usually when they're moving strongly. If they're mixed or they're small up day or small down day, that percentage can it could be dropped down to 40 or 50% or 60%, somewhere in that range. But when it's moving, the market's moving in a direction or trending in a direction, typically there's between 70 to 90% of stocks that are going to follow those major averages. And so why not have that extra momentum in your favor, and wait for that extra momentum to be in your favor. It just kind of makes sense. Now, do I always do that? No, but again, this gets back to aggressiveness. You could always get into a stock for any day for any reason. If you see a nice pattern and it looks like a nice bullish candle and a nice, whatever else you're going to analyze on that thing, and then but the market's down or it's down big or whatever, get into it. You can get into it. There's no reason why you can't get into that trade when the chart looks great and the entry point looks great and all that stuff. But you don't want to be aggressive. You don't want to be getting into 10 trades that are bullish trades when the market, the index, it looks like it's trending down or possibly going to sell off big or something like that. That's where you'd want to be. You want to have, if you're going to be adding lots of positions, you want to make sure you're doing it with that market momentum behind you. And that's why we will increase this. When we get into bull market condition, that's the whole idea of a bull market, is that the majority of stocks are trending up, and that's when you would want to be loading up your portfolios in those conditions. But I like this chart. I also like, under business services, the CLH, Clean Harbors, 92 strength ranks. We're a little bit down there on the strength rank scale, but it looks like we're in a little bit of a corrective phase right here. Had a nice little upward move here, possibly ABC, or even just the fact that it's just moving sideways through here. Now, could you wait for a breakout? The benefit of getting that extra confirmation of waiting for a breakout, again, this gets back to how much confirmation do you want. You could get a buy signal maybe at this midpoint here. Let me see where actually it'd be a little bit of ways away from getting to a buy signal there. So we're not even, it didn't move into the sell. It must have, so it was a sell. It just moved into hold today. That's what happened. Oh, no, it's showing a sell today. Oh, yesterday it did. Yesterday it moved to a hold. Today it went back down into the sell area. So it's right there. It's right on that, and that's what it's showing. It's right on that border there. So yeah, you probably aren't going to get your buy signal until you're up close to this top anyway. But it wouldn't hurt to wait for the breakout, because if it does break out, it'll have a tendency to move up about the same distance as the top of the range and the bottom of the range. You should at least get that type of a move right there, if not further, because it was trending up before that range. But this is what we're seeing a lot of out there, is a lot of seeing a lot of stocks that are consolidating, because that's what the market's been doing. It hasn't gone anywhere the last couple months. It's just been moving sideways. It's waiting for direction. And then one more, oil stocks are starting to pick back up again, although this is a traditional oil stock. This is a solar stock, but First Solar, kind of energy related. 99 strength rank. A nice uptrend. Now, could it be that this is just wave A, wave B, and you get wave C? Maybe it comes up down here a little bit deeper. Yeah, but there again, this is where you could just wait for that little bit of extra confirmation of the breakout. It breaks out above there, it's probably taken off again. All right, and we should have more on Thursday's class. Like I said, there weren't a lot that I really liked, and especially with the market conditions right now. All right, so to recap real quick, we're keeping an eye on that Wednesday candle. Break above there is going to be, and I'd like to see a nice close above there, not just a move above there, but a close above that. A clear close above that candle would be more bullish. A clear close below that candle would be more bearish. A close below that candle probably means we're coming back down to these lows here. I don't see much to keep us from going down to there. And a break above this one, you immediately have to look at this area. And there's always areas. So if you're wondering why, well, you're always mapping out these resistance support areas. Yeah, because that's where these prices have been in the past and where they've reacted in the past. And so you gotta be aware of them in the future when they get back up there in the future. All right. There's a other question that I have to look at. I wasn't. Can you email me that question? That was one from earlier. Can you email that to me? It's hard sometimes in class when, especially if it's a real technical question. I can't really stop and try to analyze it. But just glancing at it, I'm not quite sure. Just glancing at it, not quite sure what you're asking. But I don't want to just spend up class time just with dead air trying to figure it out. So if you want to email that to me, I'll take a look at that, see if I can figure that out, and I'll either respond with the email, or even in Thursday's class, I might be able to kind of show you that or explain it or whatever on Thursday. So thanks, appreciate that. All right, everyone have a great week. We'll see you Thursday for the stock specific class. Bye, everyone.